Okay, moving on to the US dollar yen now. This market turned bearish a couple of weeks ago when we removed the bat support level quite quickly on that one day when we had the big order go through. We basically covered just a huge range. I don't think I've ever seen anything like it before. 570 pips in quite a short space of time on the US dollar yen, which is just unheard of basically. But we've kind of sort of got back into where we were, and then we've headed lower from there. There has been sort of obviously a lot of concerns in the markets these past couple of weeks. We've seen the Dow and all the American markets, most of the equity markets move lower, so there's a wee bit of risk aversion in the market at the moment. So yeah, so looking at this chart, it's a bit unfortunate. We were looking at this on Wednesday night here. We were lower, just sort of around here. Sort of tea time, we were down here. It was looking perfect, and unfortunately, we came and closed back above it, and then opened up and just basically went lower from there. So again, just a bit unfortunate how that one worked. If we could have closed somewhere down here and retested it, it would have been a perfect level to get involved, next to that 50% retracement level as well. But as I said before, I said in a few of the other reports, we're actually not below the trend continuation point yet, so there's still a lot of this trade to go, all the way down to the 84. That 84 level keeps coming up all the time. I think it was the target on this daily setup as well. I think we maybe had a target on the weekly or the monthlies as well, 84. So 84 seems to be quite a big level. So hopefully going into this week we can maybe make some bullish thrusts, and maybe even come back up and test around about that 50% retracement 91.71 kind of area, and look to sell again from there. And but I mean, looking at this as well on the weekly chart, we're going to remove that 91.59 level, which is a good development. I mean, if we take this sort of candle out of the equation, where we had the massive spike lower, where we did actually find support, that 88.31, which looks to be quite a good area once that's removed to the close. But anyway, we're going to remove that 91.59 level, which is obviously close to this level up here. So basically this whole kind of level is looking quite important. This 91.71, the 50% retracement is 91.62, the weekly thrust level is 91.59. So all around this area looks to be fairly important to this market. So hopefully going into the first sort of early part of this week we can have a bit of a retracement here and get up to that 91.71 to sort of 59 area, and we can look to sell off the back of that. And also on the on the monthly chart, sorry, we can see it's also the final bullish thrusts low as well, 91.59. So if we can remove that to the monthly close by next Monday, then obviously again get back up to that 91.59 level. We've got it on the monthly, we've got it on the weekly, and we've got it on the daily, a double level on the daily. So it is obviously a really important level here. We could also mark out the high of Thursday's trading action as well, because obviously a huge move down again. So obviously that was triggered at 91.86, you know, the huge move. So you know, that's another kind of level to look at. So 91.86. So yeah, so we got 91.86 down towards 91.59 on the weekly and the monthly. So basically this whole area we can kind of identify as a good area to sell, and obviously we are bearish. We've got a couple of targets down here on as low as 77 there on the daily chart, and obviously we've got levels here on the weekly and the monthly to play towards 86, and then eventually a removal of the lows here, and kick on from there. So I think this pair is definitely looking bearish, but I would rather wait till we get to that 91.59 to 91.86 area, and look for any kind of exhaustion signals up around those areas. Okay, cheers guys.